Today we are looking at Verizon Communications Inc., ticker symbol VZ, and if it's a buy in 2021, you can see it's currently $50 a share, which is down from $62 at the start of the year. And if we go to the 5-year chart, you can see this is at similar levels when it was at the bottom of the pandemic in March of 2020. So is this another good buying opportunity? That is the question I'm going to answer today. We're going to be looking at the fundamentals of the stock and then discounted free cash flow and buffer Graham intrinsic values to give the fair value of the company, and then some technical analysis for you people who are more into the short-term trading aspect. So what is Verizon? Well, it is a multinational telecommunications company in America and one of the largest in the world and the largest in America with 120 million subscribers. So let's have a look at the fundamentals of the stock. But first, can you please give a like on the video? Let's try and get it to 15 likes because you hit the previous target. So thank you very much, guys. Helps me get this video out to more people. So what is the market cap of the company? $220 billion. $50 share price, 49 at the start of the year, 52-week low, of 49, and a 52-week high of 61. Pays a very nice dividend, just under 5%, 4.98, with a ex-dividend date of the 7th of Jan, which is, if you buy the shares before that date, you will get paid the quarterly dividend. So is the PE ratio less than the market? Yes, it is, at 9.5 to 28.5, so that is a pass. Is their revenue increasing? Also a yes, 130 billion to 134 billion. So not a massive increase over the last 4 years, but still an increase, so that is a pass. What are they doing with that revenue? They're generating a lot more profit out of it, 15 billion to 22 billion. So profit has actually increased more than revenue in terms of billions of dollars, and obviously they've increased it by quite a percentage. That is excellent to see. A little double check mark there if I still did them, but I don't. Are these shares outstanding, increasing or decreasing? Unfortunately, they are increasing, which means they are diluting shareholders. Not massively, but they are still doing it. Next, is the free cash flow increasing? No. $16 billion in free cash flow originally, and now minus 22 billion. So that is a big fail, but let's have a look at why that is the case. So if we just go here, you can see in Yahoo Finance, minus 22 billion. Free cash flow has been increasing usually, so that would be a pass. You can see the capital expenditure is minus 63 billion here. So if we look in the investing cash flow, and you can see that there was a massive purchase here on the net intangibles. Purchase of intangibles was minus 45 billion. And if we do in the quarterly, you can see that was made in the first quarter of 2021. So usually they are getting 4, so that would be 10 billion. So they probably would be on about 20 billion of free cash flow this year, but because of that massive purchase, this is definitely decreased it. So we will take that into account later, but right now that is a fail. So right now they have 3 passes. Free cash flow ratio minus 9. Obviously that is incorrect. Let's just quickly update that to see if it was a $22 billion free cash flow. What would be a bit lower? We'll say 20 billion. And that would put them at around about a 10 free cash flow ratio, which is the same as the PE ratio. And their dividend is safe because usually when they do have the free cash flow, they would be able to pay it. They would be paying about half. So let's just update that again to what it was. And let's have a look at the valuations. So I'm just going to get into this quickly because you'll see that we have future free cash flows here, and in 2022 it's expecting 9,999, and that would still give a calculated stock price of $60 a share, which is a 19% discount, but this is pretty low. So what we're going to have to do is play with a little of these numbers here. We're going to ignore this one in 2020, so this would be about an average of 104, which would increase it there. And let's just have a look what that would do. Well, that would be $120 stock, so massively undervalued. And if we just quickly say that they are increasing again, that would probably be about 110%. You can see that's increasing to 20 billion. That would be $130 stock, which is 150% discount. So discounted free cash flow is really liking this stock if it can get its free cash flow back in order, which it did previously. But as it currently stands, obviously they had that massive purchase. So next we want to be looking at the Buffett Graham intrinsic value, and what does that say? And you can see they have pretty high earnings per share and a very small expected growth rate of 3.5%. But even with that, you can still see that this stock is undervalued. Fair value of $83 a share, and a Graham price, which is basically, if you see it at this price, buy and hold, is 62. So both of the models are in line and saying it's a buy. Discounted free cash flow loves this stock a lot more than the Buffett Graham intrinsic value, but that is usually because these companies, similar AT&T, usually had a lot of free cash flow on hand, but the Buffett Graham intrinsic value also likes this stock. So next, what we're going to do is look at some of the technicals on the stock. So let me just add in some moving averages right now. We'll first look at the moving averages, a 50-day, 200-day, and 100-day. So we'll quickly put the 50-day here in green because it's the shortest moving average, and then we'll add the other two as well. Now, what I'm going to think here is that because the stock has been on a pretty big downtrend, the moving averages will be saying it is a sell, because we're going to be seeing a series of death crosses and price movements to the bearish side. So let's see when you could have found out that this was a good time to sell. So there you go. We've got the three moving averages. And you can see right now, the price is way below all of these moving averages, the 50-day, the 100-day, and the 200-day. Now, these haven't crossed, well, actually, sorry, what you can see here is this was the last time that the 50-day was higher than that, and it's dropped below it. And in fact, the 50-day is acting as a point of resistance. The price hasn't broken from that since basically this time of May. So the moving averages are a pretty bearish sentiment at the minute, as you can see. But if we go back and just quickly go to the 5-year chart, sorry, let me just go back to here and then zoom out. But we do have a massive resistance point, which is around about here, because this was in the bottom of the pandemic. So if the stock does get to anywhere in the 48 region in the next couple of days, that would be a massive buy point, because the stock hasn't broke there, and that was during the pandemic where times were pretty negative. So next we want to do is look at the here, and we'll have a look at the MACD. And once again, I imagine this will probably be a bit of a bearish sentiment, and this will be on the daily level. So yes, you can see here, and what we're looking at here is firstly the signal line and MACD line are below the zero line, which is bearish. They are crossing and diverging here. It looks like they're actually going to go on the positive side, but you can see currently they are in the red. So when was the last time? Well, your sell signal for MACD would have been definitely here at around $57 a share, and you would have shorted or sold at that point, and you would be following on right all the way down here. But momentum is changing, but it's still quite a bit below that zero line. Next, you want to look at the RSI, which is the Relative Strength Index. And we're going to look at the daily level here, and you can see it is in the oversold to normal regions. But if we go to the weekly and then bring that out there, you can see, well, actually this is even a better story. So even at the bottom of the pandemic, this is now in more oversold regions than it was even at that point. So that is definitely whenever it's gone there, you can see it shot back up. So you can see oversold, went back up, oversold, went back up. Do we have any ones further out? Yeah, even here in 17, oversold and then went back up. So RSI is saying it's a bit bearish at the minute, but if it continues here, the market normally starts buying the stock up again pretty soon. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.